Imagine waking up 1 year from now and realizing that everything costs more. Groceries are more expensive. Rent is higher. Insurance costs have increased. Even your favorite coffee costs more than it did today. That's inflation. Inflation quietly reduces the purchasing power of your money. If your income grows by 3%, but prices rise by 5%, you're actually losing money in real terms. The scary part? Most people respond to inflation by doing nothing. They leave cash sitting in low-interest accounts and wonder why life keeps getting more expensive. But smart investors and financially successful people understand something important. You don't beat inflation by working harder. You beat inflation by making your money work harder. In this video, you'll learn 5 practical ways to protect your wealth from inflation in 2026 and put yourself in a stronger financial position for the future. Let's get started. The first mistake people make during inflation is keeping too much money in cash. Now, don't get me wrong. Everyone should have an emergency fund. But keeping large amounts of money sitting idle can be expensive. Here's why. Imagine you have $20,000 sitting in a checking account earning almost nothing. If inflation averages 5% per year, that money loses about $1,000 worth of purchasing power annually. The number in your account stays the same, but what that money can buy keeps shrinking. Think of it like an ice cube slowly melting. The ice cube still exists. It's just getting smaller every day. That's exactly what inflation does to idle cash. Smart money management means keeping enough cash for emergencies and short-term expenses while putting the rest to work in assets that have the potential to outpace inflation. Remember, cash is useful. Too much cash is costly. The second way to fight inflation is investing consistently in diversified stock market index funds. Historically, stocks have been one of the most effective long-term inflation fighters. Why? Because companies can often raise prices when inflation rises. When businesses earn more revenue over time, their value tends to increase as well. Now here's the important part. I'm not talking about chasing hot stocks. I'm not talking about trying to get rich overnight. I'm talking about broad diversification. Instead of betting on one company, you own hundreds or even thousands of companies through index funds. This spreads risk and allows you to participate in the growth of the overall economy. For example, if you invest a fixed amount every month, regardless of market conditions, you're using a strategy called dollar cost averaging. When prices fall, you buy more shares. When prices rise, you buy fewer shares. Over long periods, this can help smooth out market volatility. The key is consistency. Inflation works slowly. Wealth building works slowly too. The people who win are usually the ones who stay invested for years, not weeks. The third strategy is paying off high-interest debt. Inflation is already making life more expensive. High-interest debt makes the situation even worse. Let's say your credit card charges 25% interest. Even if inflation is only 5%, that debt is growing much faster than prices. In many cases, paying off high-interest debt provides a guaranteed return because you're eliminating future interest payments. Think about it. If your credit card balance costs you hundreds or thousands of dollars every year, that's money that can't be invested. It can't build wealth. It can't help you beat inflation. The faster you eliminate toxic debt, the more financial flexibility you create. Start with the highest interest balances first. Focus on paying more than a minimum payment whenever possible. Every dollar of expensive debt eliminated is another dollar working for your future instead of the bank. The fourth way to beat inflation is often overlooked. Invest in yourself. Inflation becomes much less dangerous when your income grows faster than prices. Think about the highest earners in almost any industry. They typically possess valuable skills that employers or customers are willing to pay for. Skills create leverage, and leverage creates income growth. This could mean learning a new technology, earning a professional certification, improving your sales skills, strengthening your marketing skills, becoming a better communicator, or developing expertise that increases your value in the marketplace. Many people spend years trying to save money, but a higher income often creates a much bigger impact. Imagine cutting $100 from your monthly expenses. That's helpful, but increasing your income by $500 per month can be even more powerful. The goal is not just to survive inflation. The goal is to stay ahead of it. The more valuable you become, the easier that becomes. The fifth strategy is owning productive assets. Historically, assets such as businesses, stocks, real estate, and certain commodities have often increased in value over long periods. The reason is simple. When prices rise across the economy, the value generated by productive assets can rise as well. For example, a rental property may generate higher rent over time. A successful business may increase prices. A company may generate more revenue. These assets are not guaranteed to rise every year. Markets fluctuate. But over long periods, productive assets have generally been more effective at preserving purchasing power than large amounts of idle cash. The important lesson is this. Consumers feel inflation. Owners often benefit from economic growth. The more ownership you have in productive assets, the stronger your financial position can become. Let's quickly recap the 5 ways to beat inflation in 2026. Number 1. Don't hold excessive cash. Number 2. Invest consistently in diversified index funds. Number 3. Pay off high-interest debt. Number 4. Invest in skills that increase your income. And number 5. Own productive assets that have the potential to grow over time. Inflation isn't something you can control, but your financial decisions are. The sooner you start protecting your money, the more time your wealth has to grow. Small actions today can make a huge difference years from now. The people who build wealth aren't necessarily the smartest. They're often the most consistent. Start with one step, then keep going. Your future self will thank you. If you enjoyed this video, make sure to like, comment, and subscribe to the Wealth IQ for more simple strategies to build wealth, grow your financial knowledge, and take control of your financial future. Thanks for watching, and I'll see you in the next video.